Joining us now on the show is Peter Cardillo, who is the Chief Market Economist at Spartan Capital Securities. Good morning, Peter. Thank you for joining us this morning. This is Cheryl on the other side. What are you expecting the Fed to do? Will they go ahead with a rate cut, or are you expecting them to guide towards a rate cut through the course of the year?
No, I don't think they're going to cut rates tomorrow. I think they basically will, pave the way for a rate cut down the road. And I'm not so sure it's going to happen during the summer months either, because I think that, first of all, we need to gather more evidence in terms of the economy slowing down. Indeed, there have been some macro indicators that have been weak, but there have been macro indicators that have been strong. And if we go back to last Friday, we saw that with the industrial production. We saw that with retail sales. So the jury is still out there as far as the economy weakening to the point that we could wind up in recession. The other thing is, of course, yesterday, President Trump tweeted that he's going to have an extended meeting with the president of China, and so that renews hopes of some sort of a trade deal, which I believe is coming, and is coming rather quickly. It doesn't mean that we're going to get the trade deal that the administration is looking for, nor that the Chinese would want, but I think it'd be something that somewhat cosmetic, in the sense that there'll be some agreement and that talks will continue to go on. And so with that in mind, I think the Fed would have to be very careful in lowering rates anytime soon. So there are a lot of things that the Fed needs to observe. Yes, I believe they probably will cut their forecast tomorrow. They will have a dovish communique. And, of course, as I said, they will open the window for an eventual cut. But it's not going to come tomorrow.
Right. When we just talk about what's happening with various global bankers around the world, do you think a dovish commentary is something which has suddenly changed in the last 12 months?
Well, absolutely. I mean, look, the chief president of the ECB, Mario Draghi, yesterday indicated that he's open to more stimulants and basically paving the way for a rate cut going down the road. China has been stimulating their economy, and so there's no question that the global economy has weakened, and that some of these economies need crutches again. And the question is, does the United States follow? I don't think so, not right away. Again, it depends on the trade deal. And, of course, further macro data that may suggest even weaker than present economic activity. So there's still some jury out there in terms of the U.S. Fed. But in terms of Europe, in terms of China, there's no doubt that the Chinese have already taken similar steps. And I suspect that it's probably going to hit some of the emerging markets as well. It's very possible that we could see India move on that path.
Right. When we just look at the markets, what do you make of the sort of lack of confidence that's visible across the board? Do you think confidence is something which is lacking, and that's the reason why you're not seeing aggressive buying or selling?
No, I don't think. I think it's just a question of a wait and see by investors. Investors are somewhat on the sidelines because we never know what's going to happen. Not so much in terms of macroeconomic activity, but the consequences of this trade war. And it all depends on Washington and, of course, Beijing coming to terms. And I think that, just from a psychological standpoint, the Trump administration realizes that with the upcoming elections here in the States, that they need to settle this, and they need to settle it rather quickly. Even though the rhetoric that comes out of the White House seems to be of a tough tone and basically, threatening further tariffs and all of that. I suspect that even if that were to happen, it wouldn't be long-lasting. I want to say it would probably be comparable to what we saw happen with Mexico.
All right then, Peter, we leave it at there. Thank you for joining us this morning, giving us your take on what to expect from the Fed meet outcome. That's Peter Cardillo, who believes that the Fed will just give a dovish commentary, but won't go ahead and cut rates in tonight's meeting.